My name is Anwar Ahmed, and I'm a junior in Marquette University's AIM program covering domestic financials. Today I'll be presenting Virtu Financial, ticker symbol VIRT, with a price target of $45.85, representing an upside of 27.61%. Virtu Financial is a leading provider of liquidity sourcing and trading execution services. The company provides multi-asset, direct-to-client market-making services that make up 78% of their revenue, and execution services that make up 22% of revenue. The market-making segment enables clients to source liquidity across hundreds of trading venues in over 50 countries across multiple asset classes, including global equities, fixed income, exchange-traded funds, foreign exchange, futures, options, commodities, and cryptocurrencies. The execution services segment offers a cutting-edge pre- and post-trade analytics, algorithmic trading, risk management, and workflow management technology. The firm was founded in 2008 and is headquartered in New York City, New York. Virtu's ability to generate returns amidst volatility and uncertainty while consistently growing the underlying business in various market conditions offers a compelling investment opportunity. Over the past 5 years, the company has grown revenue at a 35% CAGR. Over the same period, the firm's income grew at an impressive 51% CAGR. The expansion into new asset classes and market tailwinds has enabled a 28% revenue CAGR over the past 5 years in the market-making segment. Technology is at the core of Virtu's business model and growth. Virtu offers a cutting-edge analytics suite that provides real-time risk assessments and transaction cost monitoring that brings significant value and efficiencies to their hedge fund and broker-dealer clients. Their proprietary technology platform can directly integrate with clients and exchanges, allowing their clients to rapidly and cost-effectively scale their business globally. Paired with their workflow technology suite, which efficiently handles compliance and reporting operations, Virtu has transformed itself into a one-stop shop for trading solutions. This has enabled the execution services segment to grow at a 51% CAGR over the past 5 years. The firm has seen impressive organic business growth in recent years, with daily net trading income climbing from $160,000 a day in 2018 to $548,000 a day in 2021. As big data and AI tools continue to become widely accepted, Virtu's platform will continue to drive immense value for their clients. The first driver for Virtu's growth is growing market participation. The growth of retail investing has created a favorable operating environment for Virtu. In 2021, retail investors accounted for 23% of all U.S. equity trades, which is over 100% since 2019. Retail investors now make up about 10% of the average daily trading volume, transacting over $38 billion per day. The retail investing demographic continues to shift towards younger investors, as 22% of all new retail investors are under 30 years old. These investors are likely to trade at higher volumes and continue to grow market participation rates through the social investing trend, which Virtu is well positioned to benefit from. The firm currently handles over 25% of all market orders placed by retail investors in the U.S. With hundreds of broker-dealer clients relying on Virtu's technology and market-making capabilities, growth in the underlying customer base provides additional revenue-generating opportunities. Virtu's multi-asset strategy will allow the firm to capitalize on shifting retail investor trading strategies. The firm has substantially grown cryptocurrency market-making capabilities to include 30 products. The firm is now directly integrated with all major cryptocurrency trading venues, including Coinbase and Gemini. Virtu expects to grow its cryptocurrency business by 7% CAGR over the near term. Virtu's second driver is market volatility. The recent volatility in financial markets has positively impacted Virtu's ability to generate revenue. Market volatility can temporarily increase bid-ask spreads to improve the firm's revenue generated per trade. Recent market volatility from uncertainties around geopolitical events, inflation, economic policies, and macroeconomic outlook continues to provide Virtu with a favorable operating environment. The VIX Volatility Index, which serves as a forward-looking indicator of volatility, has risen over 92% year-to-date, indicating sustained expected volatility in the markets. Virtu's third driver is its fixed cost structure. Virtu has a stable cost structure that stays relatively consistent in relation to its revenues. This allows the firm to exponentially improve profitability at scale. In 2020, total revenue grew by 128% year-over-year, while total expenses only grew by 6%. Historically, operating expenses have stayed consistent and are not sensitive to the volatility of the firm's revenues. This provides the firm with tremendous operating leverage and implies that periods of high market volatility and strong revenues can provide exponential profitability. To reach an intrinsic valuation for Virtu Financial, a 5-year weighted DCF model was created. The DCF included a base case, bull case, and bear case assumptions based on various trading volume scenarios. The scenarios were weighted 70, 20, 10 respectively, using a terminal growth rate of 1% and a weighted average cost of capital of 7.44%, a weighted intrinsic value of $41.87 was reached. A 150 basis point premium was added to the weighted average cost of capital to account for inflationary and market risks. A sensitivity analysis of the terminal growth rate of 50 basis points ranged from $39.27 to $44.91. Additionally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 17.99, resulting in a relative value of $70.41. Finally, a price to earnings multiple valuation was calculated using a weighted average peer multiple of 23.77, resulting in a relative value of $92.94. By weighing these models 90, 5, and 5, a price target of $45.85 was reached. Several risks were identified relating to the investment thesis. The first risk identified is market crashes. While heightened volatility provides a favorable operating environment for the firm, a market crash scenario like 2008 could result in Virtu to purchase illiquid securities and experience extended holding periods. The inability to find buyers in the market could result in selling securities at a loss, which would impact the firm's liquidity and profitability. Regulations were also identified as a potential risk. Talks about regulations regarding taxing certain transactions in the U.S. and payment for order flow regulations may change the dynamics of the market-making industry and impact the firm's ability to acquire new clients. The final risk identified was the large debt obligation. Virtu currently has $1.63 billion in long-term borrowing. If the firm is unable to generate sufficient cash flow to service its debt, it may need to liquidate assets or enter into refinancing agreements, which may impact overall profitability and growth. Douglas A. Sifu is the co-founder of Virtu Financial and CEO since 2013. His previous role in the company includes President and Chief Operating Officer. Mr. Sifu has served on the board since 2008. Prior to co-founding Virtu, Mr. Sifu was a partner at the law firm Paul, Weiss, Rifkin, and Wharton Garrison LLP. He received his BA from Columbia University and his JD from Columbia Law School. Robert Greffield served as the independent chairman of the board of directors. He previously served as the CEO and chairman of NASDAQ. Mr. Greffield led NASDAQ through various complex acquisitions as well as grew NASDAQ's operating profits 24 times under his leadership.